100 seconds of trading. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. Gonna provide you guys with a quick update here at TradeCaptain.com. We are right now streaming live into the live trading room. If you have any questions about the markets we're gonna cover, then you're most welcome to use the chat box. In fact, use the chat box anyway, just as a hello and to interact. It's always nice when people are in the chat. And that's it. So we're going to take a look at the euro, Bitcoin, gold, crude oil, and the DAX 30. As well, I want to welcome everybody that is on Periscope today. Today we live on Periscope on the Trade Captain handle. And if you've never seen this before, then you're most welcome to join us here at TradeCaptain.com and in the live trading room as we every day at 9 a.m. London time cover the markets, technical analysis, talk a little bit about what's moving, talk also a bit about any market moving events coming up during the trading session. And I do suggest that you come here and join us and also as well follow us on Twitter and maybe Facebook and YouTube. Why? Well, because if you are trading, then it's always good to have a second opinion of somebody that is good at trading. And I don't want to pat myself on the back. I have not always been good. I actually started to trade in 2006. And for many years in the beginning there, I struggled and struggled and struggled. But over the last few years, I found a system that is consistent and works for me. And these webinars and the different content that we publish give you a bit of a hint, give you an indication really of the sort of style and trading that I do. So here's Trade Captain's handle. Make sure that you follow us. Why? Well, because publish a lot of macro content, and as well, what we do is that we publish a lot of setups, especially setups from other people. If you're just looking to follow my stuff, then you can follow me at AlexFX00. And over here, of course, I publish primarily my own content and my own analysis, but I do suggest that you follow us on Trade Captain CPT. As well, technical analysis, if you love that, check it out. I'm publishing, I ramped up the amount of publishing I do. Aussie dollar, New Zealand dollar, dollar South African rand, euro yen, Ripple, ton of different outlooks. As well, we have Yuri posting here. And hopefully, the way it looks like in the next week or two, I'm going to have another contributor joining us. And you will probably see 10, 15 updates a day in this section. Finally, I'm not gonna bore you to death, but we do have a newsletter. If you sign up here, you get email in the beginning of the day. It's pretty much around this time of the day, and then you get another email around 1 p.m. And in this update, the first one is technical analysis that is coming from our premium section, and then we have in the afternoon the daily video, which is this one, and as well top articles. It's free to join. You just need to put your email in here and subscribe, and you'll be part of the list. You can always subscribe anytime you want as well. Okay. All right, so we're gonna begin, and let's just begin by taking a look at this. So you might wonder what you're looking at. Well, you're looking at Bitcoin. Bitcoin massive decline in Bitcoin, approaching that March low. You might remember in these updates, I have been bearish for a very long time. As we took out these levels, I've been bearish. And the last sort of setup was sell at 8,211 and look to target the lows. We are about to reach that March low. And guys, I think we're going to take this out. I think we're going to probably go down to 6,600, maybe all the way up to 5,916. And it's not just here. I mean, if you've been following me and know who I am, you know I've been bearish, not just this, Ethereum as well. I mean, we touched the first profit target on our way to the second profit target. Some of these sub setups, you'll find them in the new section. Not all of them, but some. Here's Ripple as well. My idea is to sell up here. So everything is just collapsing in the crypto world. There's no real demand. As well, Bitcoin Cash as well, something we covered. A very good sell setup up here, about to reach that low now. So Bitcoin in general, if you're not already short, there's not too much you can do. I think what you need to see here is some sort of a bounce, maybe up to 7,900, 8,200, and ideal from 8,200, looking to build a short position with stops above here. Um, because it's really important to get in at the right time. And what you're gonna see today, in the press and on Twitter, that everybody's talking about this collapse in Bitcoin, but it's not when the markets move to the downside, and you can read about them, sorry, in Twitter and in the news on Cointelegraph and places like that. That's not the time when it's time to get involved. The time to get involved is the quiet period. And then that's why you should be coming here more often if you want to trade Bitcoin successfully. Anyhow, okay, selling up here, stops here. Here, there's a little trick that I do sometimes. If one is already short, so you up a bit, take out a low, sell some more, because then you're speculating with the profit from the first position. That's a relatively straightforward way of quickly making more on the same position. Obviously, it comes with higher risks, but the idea is that we use the profit from the first position to open the next one. And it's interesting because did you know, because I've been doing this for so many years now, the fastest way to lose all your money trading Forex is to trade against the trend and to double up, which means that when the market goes down, you buy more on hopes that it's going to bottom out. Obviously, at one point it might bottom out, but in particular in currency markets, they just continue to move in down lower and lower. There's very strong trends in currency markets. That's why people like those markets. So the fastest way to lose all your money, in my experience, working in the industry since 2009, is to trade against the trend and to double up on your losses. What I discovered already in 2014, that one of the fastest way to make money is to go with the trend and double up on your gains. So you're doing exactly what the average loser does, but the opposite. Okay, here's Bitcoin. Sorry, not Bitcoin. This is the euro. So yesterday and the day before, we were bullish. The market took out some of the highs, we went up, and we said that probably traders are going to try to buy again at 123.69. This is this level here. And I said the short-term trend is bullish above the slow, and we are now trying to bottom out in this level as anticipated. And I do think the market will try to bottom out here. But what is also clear is that it's a little bit like last time, the trend was really bullish and then everybody turns really bearish and then suddenly the price stabilizes and go up again. I think we're heading unfortunately into a very similar situation. So here I don't unfortunately think that 122.83, so it's the level we talked about yesterday, is necessarily going to hold as support. So if you are looking to buy at these levels, I think you're better off working with the 122.36 level. If one is already long, what can you do? Well, moving down the stop loss just by itself is usually not a good idea because instead of risking, say, 1% or 2% of your capital, if you push down the stop loss, maybe you're risking 2.5%, 3%. So how can we do to deal with that? Well, one way I deal with it sometimes is that when I push my stop loss and adjust it, is that I cut down some of my position. So imagine you need to double your stop loss, but you cut your position by half. Well, then you would more or less have the same monetary risk as you were in the beginning, more or less. It's always going to be a little bit more because obviously we push a stop loss when we're about to be stopped out and not the other way around. So that's something I would do here if you're looking to go long. And if you just started looking to go long, then I would rather focus on this level here than this level here because I think this level can be easily touched. Bitcoin we already covered. So this is crude oil. And unfortunately, crude oil, I mean, we're bullish. We took out the highs. Market moved to the upside as anticipated, and then the idea was to go long here on a dip. Fortunately, though, the market traded below the key level, and it's really important to take losses early. So here we would have lost $1.10, which is not a big deal given the way this market moves. And for now, the trend is creating lower and lower highs. So I suspect the price, sorry, can continue to move down, maybe all the way down to the 61.8% correction level. How do I derive this? Take a fib from the low to the high, gives me these three levels. And given the volatility of this market, I assume that we can, as minimum, go down 50, if not lower. Now, because the overall market is bullish, I don't want to be selling here, hoping for this decline. Rather, I want to wait for price to come down to the buy zone, see if we have some nice reaction here, and then from this level, look to get involved. The alternative is that the market just trades sideways up here, and then we take out this high. And if we take out the high, we take out this year's high and also the high from last year. Sorry, from the beginning of the year, and that would be a very bullish signal and probably going to continue to head to the upside. Here is the price of gold. Unfortunately, gold, it looks like the euro. Very difficult to see the difference here between these two. They're all both trading sideways. This is euro, here's gold. So obviously buying gold or buying euro is the same thing. Here, as you know, we were bullish from these levels. We said look for it to go head to the upside, which it did, and then it continued to head to the upside. And we said if you want to, you can buy on a pullback. And I said that this level could be fragile, and unfortunately, I was proved well, it was fragile, and the market, just strikes right through it. Again, there's not too much we can do about it. Giving back part of our gains is just part of the market. The same way as the market corrects, gains a lot and declines a lot, that's how many people's trading accounts are going to be. But what we want to do is we want to try to keep the winners, and when we lose, we don't want to give back 100%. But if we go back 50%, that's just standard stuff. So what can I say? Well, looking at this today, this early morning, after a bit of sleep, tells me that down here, this level is still probably going to be supported, and the market will most likely continue to trade sideways, really between 1,302 and 1,361. There's no reason today to anticipate this range to break, so it could potentially be possible to buy at these levels, maybe early next week, when and if we reach these levels, with a tight stop loss down here. Is this like sort of the best setup out of all these markets here? No. Why? Because overall we're dealing with a sideways market, which is not sort of the ideal thing to trade. Here's the German DAX. German DAX, stabilizing here at the lows, which makes perfect sense. Most stock markets, they don't like to trade to the downside. I think we can go up to 12,151. And then from these levels, traders might try to rebuild their short positions. Here, the risk reward ratio is better than down here. Why? Because if you sell, we're 2.5%. If we go back to the low, we make 3.7. That's really important, that risk reward ratio. I know it's boring, I know it's not great. You don't have to have it making 2 times whatever you're risking, but at least a 1-to-1. And we'll definitely get more than a 1-to-1 if we wait for this level up here. And that's the German DAX. So we covered all of the markets. We're gonna look a little bit at the pound dollar right now as well, just because we have some data coming up today. Economic calendar, you click here, and you can see what's gonna happen today. Today we have numbers from the UK, GDP numbers, 14 minutes, consumer credit, mortgage approvals. None of these are extremely important except this one here, index of services. It's a little bit like, yeah, and we can actually read here exactly. It measures the UK service sector. Okay, I don't agree with what it says here, but the service sector, if you've ever been to the UK, is big. We are not famous for producing, we're not into heavy industry and manufacturing. Obviously, we do great stuff in some of those places and also very advanced stuff, but the bread and butter of this economy is services. I think it's 70% of the economy, if not more. So this is an indication really how that sector is doing. So that is something to watch. Now, in regards to the GDP numbers, they're from the fourth quarter. That's a long time ago. we are gonna finish the first quarter in 3 days from now. So I'm not really sure how much it's gonna affect or how much it's gonna change these numbers. Overall, look at index of services. If it's slightly higher than expected, the pound can gain a bit. Slightly lower, the pound can lose a bit. So which are the levels you want to watch in the pound? Well, this is the pound dollar, and I've been bullish since these levels down here for this to head to the upside, which it did. And it's first now I am looking to get involved again. Fibonacci, I took it from the low here to the high. Here you're working with a nice decent uptrend, and I see the market is bullish about 138.86. Okay, the market just corrected 50% of the move from this level to this level here, and anticipate the market to potentially touch maybe 140, but pretty much down here, looking to bottom out and then head to the high. Risk reward ratio wise, I think we're doing okay. I think we're looking to risk 177 pip to potentially make it 183, head to the upside, maybe 275. What do I think about the data today? The data is important, it's good, but it's not the unemployment figures, it's not the Bank of England, and even if it was the Bank of England, I wouldn't really care too much. I personally think as long as it's about 138.86, then uh, we're gonna try to bottom out here. I don't think the data today is as important, so it's gonna cause this market not to bottom out at these levels. So I think the market's still gonna try technically only if the numbers from the UK, like service sector, are terribly bad, which I don't think, given the way the labor market is in the UK. Um, will this, plummet to the downside? Okay, I think we covered most of what we wanted to cover today. Um, so we're gonna wrap things up. It is called 600 seconds of trading for a reason. Got a little question here. What do I think about the new ESMA rules for EU traders? Okay, so if people don't know what the ESMA rules are, is rules which limit leverage. What does that mean? Well, in forex markets, in the UK, for example, you can open up, say you put £1 in your trading account, and then you can hold the position for 200 pounds. So you can get 2 times whatever you have in your account to trade. Now that's going to be limited. I think for the major currencies is 30 times, and then for the minor currencies it's going to be about 20 times leverage. Now 20 times leverage is still enough. I think the actual levels where people trade is no more than 25 times leverage. Um, so most people, they limit themselves automatically to 25 times leverage. Why? Well, if you think about it, uh, say the euro goes up with 1% or goes down with 1% and you have 25 times leverage, well, then you would have made 25% on your account, or you could have lost 25% of your account. And I don't have latest stats, but I mean, I actually forget about any stats. I think most people, if you put money into something and you do 25% of your money in one day, I think most people would think that that's awesome. As well, if you would lose 25% of your money, then you would probably be very upset with yourself as well. So the ESMA rules, obviously, um, on the face value, so when you look at it, you're gonna say, oh, it's gonna be less interesting. But guys, most people never ever trade at 500 times leverage, and they definitely don't trade at 200 times leverage. And everybody that trades at 200 times leverage, they know that they can double the money or lose all of it. Imagine 200 times leverage. You make 1%, you make 200%. Well, the market moves back with 0.5%, and you would lose everything on your account. As well, what is interesting is, well, actually not so what is interesting is that stop out level is 50% of wherever you have on your money as well, which means that the actual leverage is actually higher than it's on the face value. So yes, I think some people are gonna be discouraged, but if they really knew which sort of leverage they were trading with, they wouldn't really care about it. So how should you think about leverage? What's like sort of the effective leverage that people look at? Well, imagine that you have 2000 in your account, right? 2000 euros. Now, if you buy the euro dollar with 10, a 10k lot, so 10 divided by 2, that's 5 times leverage. So you can already today just do some calculations on your own. Like, what is your average position that you open and say the euro dollar? Maybe it's a 50k lot. And if you have, again, 2000, then you're trading with 25 times leverage. All right. And you will see that it's very, very few people that hit those levels. What I also remember is when I was working for FXCM and Daily FX, which I did from 2009 to 2016, we did an analysis, and people that are increase the likelihood of being profitable if they maximum trade with 5 times their account. And people that trade above 26 times of their whatever they have in their account will, I think, 80%, if not more, sorry, those are the 95% that lose money. It's something like that. It's the odds of making money when you're trading with leverage higher than 25, 26 times are very, 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 very low. So that's what I can say about that. So ESMA definitely is going to affect things. People are going to say, oh, this is not that interesting. But it's just because they don't understand the concept of effective evaluation, effective leverage. Okay, guys, I want to thank you so much for joining me. We're going to wrap things up. Don't forget to subscribe to us. One good thing you can do, sign up here. We'll send you 2 emails per day, so be aware of that. You'll be part of the mailing list. We do have a special webinar coming up, the top trade ideas for April 2018. Um, as you know, I trade in my own account as well. And what I do in this presentation, I'm going to do here for this time only, is that I'm going to share with you um, 2 or 3 setups that I really, really like, which I think could be really interesting for the next month. And so it's free to join. You just need to become a member here, and you'll have access to the member section. As well, today in the member section at 1 p.m. London time, we're going to have a Q&A session for any clients of Amana Capital. Again, it's in the premium section, but to join, you need to have registered with your real account. So what does that mean? Well, if you registered your real account on a specific email, then you use the same email to register here. When you do that, you're going to have access to all the good stuff. Let me actually just show you how that looks like. Actually, I don't think I'm going to be able to do it today because I don't have the correct passwords right now. All right, guys, you've been great. Thanks so much for watching. I will not be in tomorrow because it's a bank holiday, and it's the same on Monday. So the next session is going to take place on Tuesday. Have a good day. Thank you.